Hello guys and welcome back. Today we are discussing three reasons that might suggest that we have already put the bottom in the 2026 bear market. The first reason is basically split between two smaller reasons, and the first one would be the fact that we had three big liquidity sweeps. Let's look first in the 2022 bear market. What happened here? We can see very easily that before putting the all-time highs at that moment, we had liquidity left in September 2022. And after the bull market top in 2022, we came down and we swept that liquidity. We had the reaction. Meanwhile, we left other liquidity. We took it as well. Then we had another bounce, and finally we had the last liquidity sweep of the 2022 bear market. We have a very similar case today. As you can see, the chart is looking very similar. Even though we had a very different bull market, the structure is quite similar. So in June 2025, we left here liquidity. We placed the all-time highs in October. A couple of months ago, we swept it. We had a bounce. Then we swept this one as well. And we left the final liquidity and we had a retracement. Now what happened is that finally we swept this liquidity. Does this mean that we have already placed the bottom? I don't know. Let's check it out. So let's see what happened in 2022 after we swept that liquidity. So once we swept this liquidity, we went lower about, let's call it 12%. This didn't happen yet on our chart. So if we take the liquidity, this low, and we go down 12%, a possible scenario for a bottom would be around 53,000 US dollars. It's not so bad. Some people estimated much lower. But even so, if something happened in the past, it's not guaranteed to happen in the future. Another reason that might support this as well is the fact that in 2022 we had a perfect Elliott wave count for the bear market. So we had the first impulse or retracement, second impulse or wave, the retracement, and the final impulse or wave. So it was the perfect 5-wave Elliott count. Now if we look on our chart today, as you can see, it's the exact same thing. We had the first wave, the retracement, the second wave, the retracement, and now it would seem that we are in the final leg or final wave. Now for the second reason that we might suggest that the bottom has already been placed or is very close, is that Bitcoin tends to end the bear market with a bullish divergence. A bullish divergence is when the RSI makes higher lows and the price makes lower lows. As you can see, in 2022 we had the exact same thing. We had a bullish divergence. We had a low, and once this got swept, we had a lower low. But the RSI went higher. And once we broke the yellow line, the purple line broke the yellow line to the upside, the bull market officially started. We have the same thing here. We had low, now we swept it, all this while having a RSI the RSI making higher lows. If this bullish divergence is confirmed, that means we are really close on putting the bottom. This doesn't mean that the bottom is 100% already placed, but what this might suggest is that we can do a very similar structure with this one. As you can see, the yellow line might do something like this, might range a bit, and the purple line most likely will start to go up a bit and have a fight with the yellow line. And once it breaks it, then we can officially confirm the bullish divergence and the fact that the bull market has already started. The third reason that we might think the Bitcoin is very close to bottoming out is the fact that we are below the 200 moving average on the weekly chart. The 200 weekly moving average calculates the average of the close of the previous 200 weeks or candles, but now that we are on a weekly chart, it calculates on the weekly. Perfect. Now let's take a closer look in 2022. Once we broke below, first of all, we approached the 200 weeks moving average, then we had a bounce, and then we broke below, and then we had a period of ranging in this zone below the 200 weeks moving average. We are doing quite a similar thing today. We approached the 200 weeks moving average, we had a rebound, and now it seems that we already started to have this ranging zone. Now, in order to have a better idea how long we could stay below this 200 moving average, what we can do is we can see how many days we stayed in 2022. So from the first breakdown below the 200 weeks moving average until we broke it, we stayed around 273 days. Now if we were to take this one, the sweep of the swept of the previous low, it would mean that we could stay here until 1st of March next year, which is not a bad thing because we have time to accumulate in this great zone. It would be a very good thing that this would happen. Now if we take the first breakdown, the first weekly close below this 200 weeks moving average, it would mean that we might stay here until only November, close to December 2026, which is not a lot of time to stay below 68,000, because once we break it, we might test it as a support and then we rip higher. So the conclusion for today is it doesn't really matter if the bottom is already in or we might go a bit lower. The very important thing is that we have a couple of more weeks, maybe months of bad seasonality, but it's only bad if you don't have money to accumulate. Currently what I'm doing is I'm trying to put as much money, as much capital into Bitcoin, because I honestly think we are really close to bottoming if we did not already do it. Stay safe.